Good morning to everybody. And thank you for the invitation. Ladies and gentlemen, for me it's a pleasure to be here. It's my first time, so I've prepared some keynotes or notes to not omit or to forget some important meaning. But let me start with some story. Maybe you know that it's an old story, despite the fact that it's talking about Facebook, Wikipedia, Google and internet. They've met and they are talking to each other. And the Facebook states, yeah, I know everybody. Wikipedia states, I know everything. Google, I have everything. And internet, without me, you are nothing. And there's a small person in the corner sitting, and this is electricity, and it's saying, yeah, keep talking, guys, keep talking. Just to start with this, there is a small lesson learned for me from the story, and that's stating, look at the skies, but stay with both feet on the ground. And today, for me, this is a day to look at the skies, but still, we have to be aware of the reality about the situation which we are facing with the pandemic, with the digitalization, and so on and so on. And therefore, for me, this is a good and great opportunity today to be here and to talk about the digitalization and fintech innovations. Why? Yeah, especially in the pandemic era or post-COVID era, which I hope we will be facing in some months ago, we have the opportunity to restart the economy and to proceed with everything which we started. And there is a small issue on this path, which I think Slovakia has chosen, this recovery and resilience plan. You know that Slovakia is taking part in this great and huge opportunity which European Union has chosen. And one milestone on this road is the digitalization. And why I'm talking about it? Yeah, progressive knowledge-based economy will be the leader, or the main leader for the 21st century for the Slovakia if we want to take part and proceed in the future. And the second important issue is that everything what we do and all this digital issue and the agenda shall be sustainable. Shall be sustainable in three pillars: economical, social, and environmental. Environmental sounds a little bit strange for you if we talk about it, but it's not a mistake, because all the fintech results, all the proceeds, and all the efforts we spend with sustainability and fintech will reduce our footstep, reduce what we do to the planet. Social, yeah, we shall proceed as fast as possible, but we shall not omit that everything what we do has an impact even on the poorer, even on the older people, even on all the other ones which we have in the country. And economically, yeah, I mean, you are maybe aware of, I'm here for the Ministry of Finance, so we have to deliver something also on the financial side. And what's most important of that, everything what we do in fintech shall be sustainable, which, maybe we come to the point further in the discussion, is not always the case with all the cryptocurrencies and all the efforts, but it's definitely the case with the fintech. So I'm very glad to be here today with you and to talk about the relevant fintech issues and all the processes and all the efforts and all the developments which we have, which definitely I think will be the place here for the discussions with the other experts. And thank you for the invitation, and thank you to be here.
now it's time for introducing our keynote speaker. Our keynote speaker, unfortunately, could not make it to Slovakia this time. It's Marius Jurgilas, a board member of the Bank of Lithuania.
Thank you, Chair. Dear ladies and gentlemen, dear ministers, vice ministers, state secretaries, and all honored guests from Bratislava. I really would like to come to Bratislava one day. I'm sure I'm going to do it, but due to the times that we are in, it was not feasible. So my apologies. I come from Bank of Lithuania, where I serve as a board member responsible for financial infrastructure research, and just recently finished my term as responsible for supervision. So it's very honorable for me to be doing this opening speech at your conference, and I'm very honored by this. And I'll be talking today about the central bank digital currencies, stablecoins, and crypto market regulation. We will have a panel discussing this, so I will also reserve some of my thoughts for the discussion panel. Let me start off, and in the interest of time, I'll be very brief. With the beginning, I think it is fair to acknowledge that right now we have a huge focus on the subject of central bank digital currencies, cryptocurrencies as such. Everyone is reading in the news yet another coin this or coin that, making 50% in appreciation. We as supervisors or central bank regulators are raising our eyebrows. So the fact is this: there's a lot of attention to this subject, as signified by my keynote at your conference, but was not always like this. And we don't have to go very far into the history to pick a point in time where this subject was absolutely not on the agenda of any regulators, central bankers including. And we can ask, why was that the case? But let's not do that. Let's start as I said, at the beginning, and almost like in a Bible. At first, here comes the cryptocurrency. Why did cryptocurrencies came into the existence? Well, you can say that was a rebellion to some issues in finance, or some fringes of a society, if I can say so, deciding to engage in something which looked promising to them, that they can stick it to the man and be outside of a regulatory perimeter, and also sell the promise of democratization of finance. So no one controls it. There's no centralized issuing body. So it really looked somewhat promising. But as I said, this was not at the epicenter of supervisors, central bankers, including the Euro system. We looked at it, we raised our eyebrows, and we said, that's a children's game. It's a nuisance. There's nothing of substance there. It's not, the usual blah, blah, not backed by anything, not sustainable, as State Secretary just said. Uses a lot of electricity, some of the proof of concept, that proof of works that needs to be done to sustain those cryptocurrencies. And it created some issues. The issues, we know all of them, but we looked at it also with a professional eye. We saw it almost as a marketing making, with all associated microstructure issues associated with not a currency, but a class of assets. And a new class of assets was born. And now we, even from the regulatory perspective, acknowledge that it's not cryptocurrency. At least in Lithuania, we classify it as a crypto asset with all associated implications for taxation and all the other purposes. And we looked how this asset class is evolving. It needed definitions. It needed trading facilities. I'm sure we'll be discussing about that in the panel. Price discovery mechanisms, and investor protection. And also, I'm referring to Lithuania, we had an issue, and that issue was some of the issuers of those crypto assets were not truthful and created some disturbances that we had to address from a consumer protection perspective. And I'm referring here to the ICO boom that we all went through, including Lithuania. All right, that was the first step. Then the second step was a bit maturing of that sector and the desire to reduce the uncertainty that we have and the uncertainty in price of those assets. And here I'm talking about emergence of stablecoins. What is a stablecoin? For a country which comes from a currency board arrangement where the national currency was tied to another asset, either US dollar before or euro before the Eurozone accession, we all understand in those countries, in Lithuania, what does it mean for currency to be tied for some asset. And that's what the stablecoin is promising. In essence, it is saying, let's reduce the volatility of an asset by tying to some underlying anchor. The anchor could be gold, a physical commodity, it could be a currency, it could be a basket of currencies, or it could be just an algorithm which ensures programmatically that the value of that, now I'm referring not to an asset, a currency, can be stable. And that rings a bell. Stability of a currency is something which is the primary objective of institutions like ours. Central banks are in the business of ensuring that the value of a currency does not depreciate or appreciate too much. That's what we do. But that was what the stable coins are also promising. And that's the juncture in history where the eyebrows of central bankers all around the world were raised even higher. Of course, first of all the issues of technical importance jump into the scene. Is it feasible? Technologically, can the transactions of the order of magnitude and throughput that are needed in the global and local economy, can it be sustained, right? And that's what triggered the investigation phase in the central banking community in the area of central bank digital currencies. And I'm going to switch to this subject. What is central bank digital currency? Is that, as I'm just telling you, a response to this private initiative? Or it's a phenomenon in itself? I think it's both. Why is that? Some of my fellow central bankers are still saying, I think rightly so, that central bank digital currency could be a solution looking for a problem. That is almost right in some areas of the world, but maybe not exactly right in others. And that is why we have a very diverse progression in central bank digital currency space all around the world. In the countries of Southeast Asia, they have moved very far ahead in terms of already testing real and live implementations of central bank digital currency, with the objective of maybe looking for efficiencies in replacing cash with physical cash. In other areas of the world, like Caribbean, they're looking to address the issue of financial inclusion. What issues are we trying to address, for example, in the Eurozone? And here I'm going to delay my answer to this question to the debate that we'll have in the panel. But the question is really important. What is the issue that central bank digital currency is trying to address? Is there a problem? Is really our financial order broken? Global financial order. As I said, there are some fringes of a society that are claiming so, but to the large extent, no, or not yet. Are centralized infrastructures failing? Actually, the opposite. During the pandemic and increase in online transactions all around the world, central bank provided infrastructures and private market provided clearing and settlement infrastructures really sustained huge flows and increases in flows, and nothing broke down? So the answer is no. Actually, the opposite. We are, together with the private market, introducing new instruments. Let's talk about instant payments or ability to make payments from mobile apps to each other, so person-to-person payments, which the private market participants are introducing. So it seems that even private market instruments are catching up to reality. So what is the issue that has not been addressed yet? And let me point one. I think the issue that is not really on the radar in any national debate is the issue of cross-border payments. And that's fair, because majority of the payments in any country are made locally. And from institutional perspective, from infrastructure perspective, legislative perspective, everything is taken care, and the citizen or business in any nationality, it feels completely satisfied. Unless you engage in international trade, or you have to engage in cross-border transactions. And that's when you hit the problem. And that's, I think, where the space of central bank digital currencies is most promising. And I think that's the case why institutions like Bank of International Settlements, Financial Stability Board are jumping at the issue and saying, this is the area where we are looking for improvements. Having said that, we also have a legal aspect to address here. Is central bank digital currency an infrastructure like Target 2? Is central bank digital currency an instrument like a card payment or credit transfer? The answers to those questions have legal implications, which could be titled by asking the question, is digital currency, digital dollar or digital euro or RMB, is it a legal tender? If it is a legal tender, everything falls through, because legal tender is provided by the state, designated entity, competent authority, national central bank, or the system, euro system in our case, and we will implement it and produce it. If it is just an instrument, yet another one, serving some purpose, maybe the private participants can introduce it. Are we competing with them? If we are competing with them, what do we do when we engage with them and start talking about technical issues? Are we not infringing on intellectual property in case we are competing with them? There are very important questions that need to be addressed in this debate. But I'll finish with a lighter remark. I had once a conversation with my son, who is a 12-year-old, and he teased me into joining a computer game that he's playing. It's a computer game, I'm not going to say the name of it, but it has almost 500 million of users online. And you know me, I just joined the game, and immediately he said, "Dad, you need to change your outfit." Like, what do you mean outfit? Because you look like default. In that lingo, default in normal human language means you don't look appropriate. Like in this conference, I needed to dress up, look appropriate, right? In that digital world, you also need to look appropriate. You need things, outfits, claiming some assets. And in that space, you need to trade and engage. And I said, in that particular game, there are 500 million users, all globally, engaging in transactions. And I started investigating and trying to talk to my son. And he pushed me aside saying, "Dad, stop it. Don't pretend like you understand what you're talking about. You are just a casual traveler in my world. I live here," said my son. And that's the thing that we need also to address, that some things of our society is switching into virtual, digital space where we spend our time. Maybe not productively, but that's what's happening. Thank you. I'm looking forward to our discussion.
Hello, good morning. Can we hear you? Marius is there. Very good. Good morning, Marius. Now I would like to introduce the other speakers. We have Ľ.Ódor, Deputy Governor of National Bank of Slovakia. Please welcome up on the stage. You can sit just next to me here. Okay. That will be perfect. Welcome. Marcel Klimek is already here. That's perfect. Oldrich Didier, Bank Board Member of the National Bank of Czech Republic. Welcome up on the stage. Please. Then we have one online participant, Rok Švelc from Slovenia, Legal Officer at DG FISMA European Commission. Let's see if we can hear you right away. Last but not least, Martin Brunko, Binance Executive Vice President in Europe. So, Ľ.Ódor, Deputy Governor of National Bank in Slovakia. What is your opinion on central bank and what's the progress in Slovakia?
So from my perspective and why we are working quite hard to investigate the possibility to issue a digital euro is that, of course, we live in a different century, and this century is definitely digital. So also the financial system has to adapt to these new conditions. But from my perspective, it should serve the public. So the central banks are here to offer stability of the system and offer services which are, of course, which have value added to the citizens. So what does it mean, actually, that what we need is, and we always, or almost always, were the providers of really a safe, cheap currency and with a privacy in our minds. So basically, if you look at how cheap or how costly are transactions, it is definitely true what Marius said, that international transactions are extremely slow and very costly. And also, if you look at the retail trade, some of the merchants are complaining that even using cards, this is really a costly thing to do. And you know the situation. You come to a merchant and he says, if you pay cash, I will give you some discount. So from that perspective, there are also still some inefficiencies on the markets which can be solved if there is a trusted currency issued by the sovereign. And another aspect which was very important when we asked citizens all over Europe, are you in favor of central bank digital currency? What are the aspects which are really relevant to you? And number one was privacy, actually, which is, now sometimes if you look at some, problems which you can see all over the world with some social networks. So from that point of view, to tell it quite explicitly, I don't think that central banks will have an appetite to sell your data. So from that perspective, if there's a demand from a citizens to have a currency which is still, still can feel the privacy there, that is an opportunity to do. Another quite interesting aspect is that actually if cash is diminishing all over the world, then, and if we really switch to a fully digital monetary system, even if it is in euros, in that case, still there might be a reason to issue central bank digital currency as a kind of a backup system, which is very much separated from the traditional financial system, in order, if something happens, if there is a huge scale cyber attack or whatever, then you can switch to another system which is robust and relevant. So I don't want to talk too much about it. So how I would like to summarize this is that there are still aspects of the monetary system which requires central banks and which requires monitoring of the stability of the system. And from that perspective, given that we live in the 21st century, there might be a strong case for a digital currency issued by the central bank, but this you should understand this as a complement to cash and not a substitute to cash. If people like cash, we are not, rushing to abolish cash. This is something for the newer generation if they would like to, have the same services as cash is promising to you, but in a digital world, there should be that opportunity in a form of a central bank digital currency. So this is all from my side as an introduction. Thank you.
Thank you very much. Anybody have any comment on this introductory speech? In that case, I would like to leave the word to Aldrich Jedek, the second central banker on the panel today. So we start with the central bankers here. And your opinion on stablecoins and central bank issued digital currency.
Okay, also thanks very much for inviting me. Yes, I'm here for the first time in this premises, so I quite enjoy this space. So there is hardly any central bank which doesn't pay attention to the CBDC. Some are experimenting with them. The Czech National Bank is the observer. Yes, as our governor said, we will not develop a COVID vaccine on our own. Yes, because it's too expensive, so it's better to monitor what is the development around the world. Of course, we are closely monitoring the project of digital euro, yes, the Swedish e-krona, and so on. And doing that, I have to say that so far we have more questions than answers, yes, if I can put it like that. I know that there are several kinds of CBDC, as wholesale CBDC, multi-currency CBDC. What we are debating is retail CBDC. Okay, what is added value for the Czech citizens as from this project? And so far, yes, we are a little bit hesitating. Yes, what problem can be fixed? Yes, if we look at our banking system, yes, we are quite happy that the banks are offering comfortable services in terms of reliability, speed, yes, user friendliness, and many other aspects. Recently, we introduced the system of instant payments. As the commercial banks appreciate the position of the central bank, that we can act as impartial manager of infrastructure on which commercial banks can use. And the next step is the mobile payments. So we think that the spectrum of services is quite happy. Of course, we are observing the development as there are debates that the CBDC should provide the offline payments, or they can be involved in programmable money as smart contracts and so on. Yes, that's true. But once again, if commercial banks will find this area as an engine of innovation, so they probably would be even better in offering these services. So what will be the added value of the CBDC if the commercial banks will provide these facilities even better? So maybe we are quite influenced as from the current situation in the Czech Republic. As we also have a payment system administered by the central bank, and the employees and public bodies can use this system for sending money, receiving money, yes, and any other activities. But if I compare our system of internet banking with those of commercial banks, is a huge difference. Yes, we are not under permanent pressure to innovate. Yes, we have a monopoly to handle these private bodies. On the other hand, yes, like Česká spořitelna have a George, yes, commercial bank has also its system of its own. So it's the spectrum of services is much wider. And I also partly a teacher. Yes, recently I supervised PhD thesis of a Chinese student, which was paid attention to why Alibaba and Tencent are so successful. And the key thesis was that this is the spectrum of the services as targeted to all groups of people, as those who are involved in environmental issues and others. So I'm quite skeptical that the central bank will be so successful, and that the people, general people, when we debate the retail CBDC, will somehow appreciate this project. I think there is a trade-off, as the money can serve several purposes. One of them is a store of value. And I agree that people would be happy, yes, to have accounts at the central bank, because these money are completely risk-free. But it has some consequences for financial stability, yes, that some limits should be put, yes, some spending limits, or, for example, the limits on the balance sheets, which in order to minimize some problems for financial stability. But these limits may create problem for, let's say, the business people. Yes, if they would use the CBDC, they would feel constrained. Yes, on the other hand, there is a transaction motives which the CBDC can offer. But as I said, I don't think that we will be so attractive as the payment services of commercial banks. So, of course, we are observing. Yes, as I said, we are observing what's happening in the Eurozone. Our banks have mothers in the Eurozone. So from the banking point of view, we are members of the Eurozone, yes, because 90% of banks is owned by Eurozone bankers. So if a solution will be found there, okay, it will be easy to adopt it in the Czech Republic as well. Thanks.
Thank you. I have one follow-up question. As a central banker, are you not afraid losing the monopoly if private banks are issuing currency?
I think that we don't have a monopolized banking system. We have 4 big banks, okay, which share the market. I don't think that's a oligopolistic system. But another question is, if something would happen like that, is it really true that we cannot address this problem with some appropriate regulation? Yes, I think this avenue should be also addressed.
Okay, please.
No, just I wanted to say that actually. Your question is another relevant one. To what extent central banks feel that other private solution can dominate on the market, and therefore central banks will lose the monopoly of issue money, and also the fragility of the whole financial system can be a problem. And this was one of the triggers why, for example, we started discussions about digital euro. So that is, I guess, a relevant question. And also in some cases, probably, even a case of a small country like Czech Republic, there can be a danger that you will introduce digital euro sooner than you will introduce the euro in your country. But that is just a joke.
Thank you very much. Yes, please.
One smaller remarks as far as the monopoly. Of course, we have the monopoly for issuing the banknotes and coins.
Yes.
But even today, this monopoly occupies, let's say, around 10% of the money supply. So it's quite marginal, I would say, role. The lion's share
Yes.
of the money market falls on private money.
Yes.
So we also should not, I think, forget about this issue that even today, as the role of the central bank money, yes, if it is seen as a banknotes and notes, is quite marginal, I would say.
Yes. Martin Brunko from Binance would like to comment as well.
Yeah, I think when it comes to losing the monopoly, it's very important to distinguish what kind of stablecoins we're talking about. And I think, if you look at where the main stablecoins are, these are fiat-based stablecoins. So, effectively, it's a big question: are there really central banks losing monopoly if effectively the stablecoin is fully backed one-to-one with the fiat reserve, right? So it's a very different question than if we talk about a stablecoin that might be an algorithmic, fully crypto-based stablecoin, or like what Libra originally proposed, Facebook with Libra, where they had a basket of currencies, etc. But I think it's a great question, and it's certainly a key and a very important consideration. But it's then very important to also keep in mind which way the quote-unquote market is moving towards what type of stablecoins.
And stable coins, they are fully backed by fiat currency. There have been some doubts about that regarding some stable coins.
Discuss it later, yeah. That's a very good question.
Okay. Okay. Now I'd like to call to Rock Schwelz, the legal officer at DG FISMA European Commission. Of course, it comes to regulation, legislation. He can give us some insight into this market for central bank currency and private created digital currency. Please, welcome.
Thank you. Thank you very much to everybody. So the speakers have already addressed the issue of CBDC. So this is one of the very important work stream that is led by the European Central Bank, and the Commission is closely cooperating with them in this investigation phase, because we really need to ensure that all issues are addressed, that trade-offs are thoroughly discussed, so that we get this project right at the end of the day. But it will still last quite some time before it will be up and running. But I will talk now about a different project that is more imminent. Then this is how to regulate cryptocurrencies and stablecoins. That was also the question before, because this project is now already discussed in the Council and the European Parliament, and I will present this legal framework that the Commission proposed in September 2020. So what we proposed is actually two legal acts, one addressing crypto assets that are already regulated by the existing financial services legislation. So these are so-called tokenized securities. And we have proposed an act that is called the DLT pilot. So it's a pilot on market infrastructures based on DLT, on digital ledger technology. And here, the idea was, because we did the investigation, as we do now for this, with the central bank, we did an investigation, and the European supervisory authorities issued a report that said that some crypto assets are already covered by the existing financial services legislation. This can be, a financial instrument and there is a dense legislation on financial instruments. But the problem is that this financial services legislation has not been written with crypto, this new technology in mind. So they may not be the most appropriate for this new technology. And here we are in DLT pilot, we are focusing on the area of trading and post-trading. So trading and settlement on digitalized securities, where DLT technology has a lot of promise, a lot of potential in terms of security, in terms of speed of the transactions, transparency. But we don't see many projects in the EU in this area, or that the projects that there are more of experimental nature. The problem is that maybe it's because of the EU legislation that is hampering this development of such projects within the European Union. And we have now come up with a regulation that actually enables experimentation by allowing market infrastructures to get a certain flexibility or derogations from the targeted rules in the financial services legislation that may hamper the development of this technology. And based on this experiment, we will get more evidence which financial services legislation may be not fit for purpose, and this will inform future development of the EU legislation. So this is a kind of time-limited experimental regime focused on crypto assets that are currently already regulated by the financial services legislation. But in our investigation, we also found that most of the crypto assets are not regulated by the current financial services legislation, although they may exhibit similar risk than securities or financial instruments in terms of investor protection, market integrity, market manipulation, and financial stability. And there was also the issue of stablecoins that was actually discussed at the international fora. The regulators around the world were grappling with the question how to regulate and how to address the risk stemming from stablecoins, because they can become global stablecoins and could have implications for financial stability. So the EU responded, besides this DLT pilot that is focused on the trading and post-trading on financial securities, we responded with a comprehensive framework on crypto assets that are not covered by the existing legislations. This act is called a regulation on markets in crypto assets. So the shorthand, the abbreviation is MiCA, we call it MiCA. And in this act, we propose to regulate issuers of crypto assets and also crypto asset service providers. So the service providers that provide services in relation to crypto assets. This can be trading platform, exchanges, execution of orders, and other services in relation to that. And just to outline the main approach or the main objective of this act, we don't want to stifle innovation here, but on the contrary, what we want to enable innovation by providing a kind of clear, dedicated legal framework that would provide legal certainty to the market operators. So because the companies, they like legal certainty, that the legal framework will not change, that it won't be banned. And then at the same time, they don't need to comply with specific legislation of each member states, but once they are authorized or once they comply with EU legislation, they can provide services across the European Union. So it's good for the industry, but at the same time, there is always the balance that we need to address the issues, societal issues and the risks that are arising from these new classes of crypto assets. And these are investor protection, market integrity, financial stability, and also in the case of stable coins, also financial sovereignty, monetary transmission issues. How we have regulated this, what our proposal is actually that we regulated the issuers of crypto assets, that we divide in three categories. Two are stable coins. So the most stringent regulation is on stable coins that are called e-money tokens, that refer to a single currency, so US dollar, euro, and this we propose to regulate those as e-money. So it means that they would need to have fully backed reserve, because there would be redemption rights at par. So if you get €1, you could get €1 back. So it's the most stringent regulation is those that can be actually issued only by money institutions and credit institutions, and they need to be authorized. The issuers need to be authorized within the European Union. Then we have the second category of stable coins that are called asset reference tokens. That refer to a basket of currencies, commodities, or crypto assets. So it's a kind of, they stabilize the value vis-a-vis a basket of different assets. And those, the regulation is that we proposed is a little bit not so robust as for e-money tokens, but nevertheless quite important obligations that they need to be a reserve of assets. There needs to be full transparency on the redemption rights. These issuers need to be authorized within the European Union to be able to issue these crypto assets, and lots of organizational prudential requirements, also on capital requirements and so on. And then the final category is all other crypto assets that are not stable coins and that are not currently regulated. And these are all these cryptocurrencies that are highly volatile, altcoins and so on. The so-called utility tokens that fall in these categories. Just to let me know that there are also certain thresholds proposed that, for example, crypto assets that don't have financial use would be excluded. So that always needs to be a certain balance what you regulate or not. But this, the last category, it's the most light touch approach. Here we focus on transparency and disclosure. So every issuer would need to prepare a white paper where the characteristics of the crypto assets are fully described, and there is also liability if there is a kind of misguiding information and things like that. So it's more about transparency. They need to notify the project in the member states, but they don't need to be authorized. And then finally, the final category is crypto asset service providers, for example, exchanges. Crypto exchanges, they are trading venues that when you trade with crypto assets, these are crypto asset service providers. And for those, we also have an obligation to be authorized within the European Union and to comply with certain obligations on conduct of business requirements, organizational and prudential requirements, and also some specific obligations in relation to each service that we have borrowed and adapted more in proportionate manner from the similar legislation that we have for the financial services. So these are two acts that we have proposed at the European level. Now they are being discussed within the Council and the European Parliament. DRT negotiations are a little bit more advanced because we are already at the trialogue phase, and the MiCA regulation is now at the phase before the trialogues, but we expect that they could be adopted next year.
Thank you very much. Interesting that the European Commission have got so far in their legislative framework and the framework regarding stable coins. I guess that was new to many of us. Probably not new to Martin from Binance, who is in this business. I hope you can enlighten us what this means for your business and for the issuers of stable coins and other cryptocurrencies.
Thank you so much for that. I have prepared a couple of slides. Could you please show them on this back? Going 8 years back, exactly to the date, I was having a breakfast in Palo Alto in the middle of Silicon Valley with this fintech entrepreneur. He built the most successful fintech in Latin America, sold it to one of the biggest Spanish banks in early 2000. And he was telling me in 2013, October, Martin, the next big thing, it's basically, it's this Bitcoin thing. And it's the greatest money, finally we're gonna have great money here, and this is gonna replace all the money, and this is the future of money. And you cannot trust the central banks, the central bank, the government money, they're worthless, they're terrible, really we need to, this is the future of money. So I look at him and I tell him, first of all, Van says, you're from Argentina, so of course you don't trust your central bank. But those of us who come from OECD countries, we have absolutely no reason not to trust the central banks. Actually, the money that we've been using for many, many decades and centuries, they're pretty solid. I don't think there's much of a reason to go to other kind of money. Second thing, as a Harvard-trained economist, let me tell you about money. And let me tell you the definition of a good money. And actually, one of the definitions of good money is that it's a good medium of exchange. And that means that the value needs to be stable. Because if you're trying to exchange against something whose value is changing all the time, it's pretty useless. And you look at Bitcoin, the price is fluctuating even by 10% sometimes during the day. So it's basically useless as money. So, allow me if I'm going to be a little bit skeptical. Now, fast forward 8 years, and if I can get the next slide, and here we are. First of all, we're discussing, stablecoins here with 3 central bankers and 1 deputy minister on the same panel, and really it's an honor to be speaking here. But if you actually look at now, what does this industry mean? So the total market capitalization of all the assets right now is roughly $2.5 trillion. The daily trading volume on the crypto exchanges is more than $100 billion. So that's, just to give you a sense, that's almost 50% of the daily volume trading on NASDAQ. And actually, if you look at the market capitalization, that's probably bigger than most of the large financial companies combined. The number of daily transactions on Ethereum and Binance Smart Chain is 2.7 million. So, we're really coming into a new world here. Next slide, please. So within this new world, there's Binance. And I'm sure most of you, and if not all of you, have heard of Binance. We are the biggest crypto exchange in the world, but we're also the biggest ecosystem in the world. We're not just a crypto exchange. There's all kinds of other infrastructure that we're providing, including Binance Smart Chain, which, as I said, now actually accounts for more transactions per day than Ethereum. It's fully compatible with Ethereum, but the transaction costs are much, much lower. This is why there is such a huge take-up. The Binance coin, BNB, that's basically the 3rd largest crypto asset in the world after Bitcoin and Ethereum. And we also have the world's, the largest, by far the largest market share of all the crypto exchanges, roughly 70% compared to Coinbase, which is number 2, which is 8%. So we're really at the heart of the crypto world. Next slide, please. So with that kind of market share, with that kind of power, with great power comes great responsibility. And one thing I would like to remind everyone is we're a company which is a 4-year-old company. So that's almost a child still. But we've become very big, very important, very powerful. So while we've been going through this very, very rapid growth over the past 4 years, there was always focus on doing things right, but we probably didn't get everything 100% right. And so now is the time where we're really kind of refocusing our priorities. And our key priority, the top priority right now, is a massive focus on strengthening our regulatory and compliance framework. So there's always been, but now there's dramatic focus on particularly 3 issues: financial crime prevention, consumer protection, and also ensuring that whatever we do has no negative impact on financial market integrity and stability. We're now starting to really strengthen the transparency and proactive communication with local regulators. And we're also starting to work with some of the local regulators to ensure that, as the gorilla in the room, that we set the right example for the rest of the industry. Next slide, please. So, just on strengthening our regulatory and compliance framework, since this is such a big priority for us, we have been hiring massive amounts of people. I've been working on and off with Binance for the past 2 years, but actually I myself just joined about 2.5 weeks ago. I've spent, on and off more than a decade in various functions in government, including at the European level in the Eurogroup working group and EMF. We are massively strengthening now KYC processes and also our infrastructure for all users across the European Economic Area. And we're also now starting to participate proactively in regulatory discussions and partner with local regulators. and also investigators. We're actually now also massively hiring people from investigative police forces so that we have, this capability and capacity internally. So where that brings me now so this was just a brief intro on Binance, sort of who we are and what real focus. Again, the key message here is that it's great to be on this panel with regulators because that's really our focus now. And I think, moving back to the issue of stablecoins, we want to be an infrastructure provider for the blockchain economy. And as far as I'm concerned, the stablecoins, they are a key part of this infrastructure. And it's actually great to have a discussion to what extent this infrastructure should be provided by the government or the central banks, and to what extent by private entities. I mean, I think, there was an example that you started with, Mr. State Secretary, about electricity. And I think electricity is a good example. There were times when electricity was provided only by private companies. There were times when electricity was provided by state only. We are now moving towards a world, or we have, I think, moved more and more towards a world where electricity is being provided largely by private companies, but there is a very strong regulatory framework and there is a very strong oversight telling these private companies how they need to behave, what they need to do to ensure legitimate public concerns and priorities. So I think we're still in the early days. I think there's a huge value to stablecoins as part of this essential infrastructure for blockchain. Even if you read papers by the likes of the BIS, OECD, even they acknowledge that there's huge potential for innovation in financial instruments, in payments that is linked to stablecoins, but there's obviously also very good risks. You have indirectly pointed out one of them with the question to me, I think. And that's why I think this is really important for all of us, and particularly for the private sector participants, that there is a very strong rule setting by the regulators, because I think otherwise the risk is something very bad might happen. And if something very bad happens within the market, I think it's going to negatively influence, not just the market, but all the private sector participants. So I think it's for the benefit of the private sector participant like Binance to have regulators who don't stifle innovation. I think this is critical. So the regulatory framework really needs to be smart. It needs to be enlightened. It needs to be reasonably light touch. But for sure, I think all of us would agree that the days of the Wild West of the 2013, when I first bought a Bitcoin, are over, and it's a good thing that they're over. And I think it's a good thing that now we're being taken seriously as an industry by the regulators. Thank you very much.
Thank you very much. I would like to hear Mr. State Secretary's comments here, given that Bitcoins and such are mainly used for transactions by criminals, paying somebody who hijacked your computer network, your oil pipeline, your databases in the hospital, etc., etc. We understand why the regulator haven't done so much about this, because whatever country moves first will lock out their citizens from an asset while other citizens can take advantage of it. But what should the governments do? What should the Ministry of Finance worry about when it comes to non-stable coins, but this Bitcoin and similar digital currencies?
Thank you. That's a very good question, and let me start with the topic that we have, the CBDC. This is the central bank digital currencies, and this is part for me of the answer, because there is several questions linked to the theme you've touched. We have now the area where we have a lot of cryptocurrencies. Some of them are stable coins, some of them are not, some of them are backed, some of them not. Generally, if we have a situation where we see that some of the major economies, let's take the Chinese, are bringing to the market the digital yuan or digital currencies, we have to react to that somehow. And I think the CBDC as such is a good answer and a good solution, because let me see from different perspective. First of all, you have an electronic cash or electronic money nowadays, but this electronic money has some negatives. Yeah, you bear in risk of your bank. This is the first risk. It means this is not with central bank. This is with your private bank. Second, your transactions are under control from different perspectives. First of all of the transactions you make with your electronic money is somewhere written. And the second, let me take it 10 years ago to the example of Greece. I think in Greece there was one of the answers to the crisis that the deposits above some certain limit, the colleagues may help me, were taxed or were nationalized by 10% or something like that. So this is not the case with the cash. This is not the case if you have a cash with you at home. And this shall not be the case with digital currency, which, first of all, is risk-free, as Mr. Jedek mentioned. And this is exactly the case where maybe if we go a century back or 100 years ago, we have a Glass-Steagall Act, if you may remember, in America. And this was the split between investment banking and commercial banking. And now we are talking about transactional banking, so the payments, and all the other investments which are also in commercial area. That means you put your money, you deposit your money with a certain financial institution, and this financial institution use this money and grants loans or invest them. And if we were able to split this, which I'm not sure we can nowadays, we would make a split between risk-free and risk-bearing transactions. So I'm definitely in favor of CBDC, and that's not only my opinion. I think from a global perspective, there's a situation when you are market maker, market leader, and market follower. And in a situation the Chinese or the Americans do so, we have to follow them one day. So this was the answer to the CBDC. To the currencies, there's extremely, or the basic question which we've touched just partially, the monopoly, how to deal with the currency monopoly or monetary monopoly, which is now with the state, and which gives the stability to the system. And this is especially after Bretton Woods 71, I think, very important, as all the currencies are more or less virtual and just covered by a law. The law stating that everything, every local currency, it means euro in Slovakia and Czech crown in Czech Republic, is covered by the goods and the services produced in the country or in the area, in case of the euro area, which is not the case with the Bitcoin, which is not the case with other crypto assets. And this is the huge difference in how to deal with that. From my perspective, all the cryptocurrencies are now in area, and I think one of the speakers before me touched that. These are not the currencies, these are the assets. It means we deal with them as with assets or investments. And we can make deals or transactions in real life to transfer just goods or services between us without medium of exchange, without using money. But at the end, we shall have a system, financial system, which should not be fragile, and which shall bear some guarantees and 21st century, and we want more guarantees and more securities and more certainties in our lives. And therefore, I think digital euro shall be developed and will be developed. We shall be taking care, dealing with some crypto assets. This is still area of investment, and everybody should take care of what's his choice. I mean, stable coins are different story. The other coins are other story. And if you touch the Bitcoin, one limit of Bitcoin, for example, is that we have a limited amount of Bitcoins at the end. And there's one problem with this currency, that it's if we would have a world where the Bitcoin is the only one currency and not an investment good, the world would disrupt, implode at the end, because from medieval age we live in more or less peaceful circumstances due to the fact that we are able to grow and not just to transfer the stable wealth among us. And therefore, if we are not able to follow to the growth with the growth in the money supply, the world would not function. So this is my answer to you.
That's a very good answer. Now, Bitcoin is, of course, a little bit like gold money, where there's a limited amount of gold in the world. Now I would like Martin Brunko from Binance to say his view here. And I will say one thing first. So far, cryptocurrencies have not created any financial downturns in the world, and we haven't seen any real...
May I just have a quick response to the question of, what about Bitcoin being used for criminal purposes, right? And again, if you operate any kind of infrastructure in the crypto world, this is your anathema. This is your number one concern. You don't want to be in any way involved, abating, helping, unknowingly, any kind of financial crime. So again, this is something, AML, financial crime prevention, this is something that's being taken extremely seriously at Binance. Really massive resources being poured into it. Because, well, it's just so important for all of us. I mean, just like if you operate any kind of fiat-based institution, financial institution. However, I wanted to also add is that I think it's a little bit unfair because this is quite often used against sort of, crypto. Well, this is just for criminals. It's such a good instrument for criminals. Actually, I would dare to argue that the best instrument for criminals to pass value is something that's issued with a monopoly power by the central bank. It's called cash. And actually, if you compare cash to Bitcoin, in a way, Bitcoin is much more traceable. And this is why you often now hear these days about, okay, there was some criminal act committed, money was stolen, money was transferred, and actually it was able to be recovered because, well, that's the whole point of blockchain, that the transactions are actually recorded on the blockchain. You can trace them, not always, but you can trace them. So again, I think we need to be mindful of arguments which are quite skewed sometimes.
So a Bitcoin transaction is reversible?
Well, and like cash transaction, I guess, is also reversible, right? But
yes,
it's the question, the really key important question here, it's the traceability of the transactions.
What you're saying is, of course, true. I mean, the drug lords in South America, they have not replaced the dollars for Bitcoins, for example.
I don't know anything about
Well, I actually looked it up the other day because I was interested to see if the big crime is actually using digital currency instead of good old hard cash. But no, they're sticking to cash. Now, I would like to hear a word from what the central bankers think about cryptocurrency in general, and after the state secretary's ideas regarding that we should have a digital euro. Should that digital euro be created by the central banks, or it's okay with a digital euro created by commercial banks or other players? Who would like to go first?
I'll address this question, but I really want to comment on something which was said on the previous remarks as well. When I select my portfolio of cryptocurrencies, I'm joking here, But if I would be, I would definitely not look into a crypto token which doesn't have a stable supply, where the supply of tokens increased more than 25% in 6 months. I definitely are looking, because I'm a knowledgeable person. I'm looking at how many people control the issuance. So if issuance is concentrated in one place, like one node, I would definitely look suspicious. So if for example, there is this new token where the supply increased in 6 months more than 25%. That token is minted by one node on the network, and there's no supply cap. So unlike in Bitcoin, where there is a supply cap, there is no supply cap. So that really looks suspicious to me. But I think you know that token, so I'll ask you later what this riddle is about. But more seriously on these issues, yes, so the supply in the economy of money is increasing. And how fast it is increasing is, the essence of monetary economics, and, the science of trying to control the value of the currency without affecting the financial market and the real economy. But referring again to what the analogy was being made by the colleague from the Binance, that maybe, and now answering your question, should this private market or the centralized institutions like central banks produce this almost infrastructure solution? A good example of how things could go wrong is specifically the electricity market that a colleague from the Binance referred to. Look what happened in the United Kingdom. Then the electricity market was fully deregulated, and private market participants were able to provide electricity. It looks fine. Competition drives prices down. Consumers are very happy. And then you hit turbulence. Turbulence due to outside reasons pushing electricity prices high. The providers are not able to provide the agreed electricity at the fixed price, and they implode. And all of a sudden, the state finds a new function. We central bankers, we are the lenders of last resort. During the global financial crisis, we became market makers of last resort. I don't think that we are looking for providers of last resort function as well. In case private market participants develop a provision of currency as such, and if it doesn't work, then we have to back it up. But that's also a possibility. The other world is where the central bank is providing that infrastructure with certainty, because I don't think that the citizen on the street really differentiates. Is it commercial money that I'm dealing in, bank account, or is it my money at the central bank? Early stage trials with citizens, real citizens, allowing them and asking really behavioral type of questions are showing that surveys say people value privacy. In reality, not really. Will they use central bank currency? Meaning they will use it to the extent that we will create financial stability issues? Maybe quite the opposite. People don't see the benefit. How is my e-wallet worse compared to this another e-wallet that the central bank will provide to me? So we have to show the benefits to the consumers, to the citizens, and otherwise, the solution that we'll create will not be used. So that's my answer to the question: is it centrally provided or private market provided?
You're thinking about central bank issues versus privately issued, let's say, stable coin or e-Czech crowns in your case.
As I said, even today, the payment system is dominated by private money. As we have a monopoly on issuing banknotes and coins, but definitely we cannot use our monopoly to influence something. Okay, we have to provide as much banknotes, as much, let's say 1,000 banknotes, 500 banknotes as the public needs. Yes, if we didn't comply with this request, the smoothness of circulation would collapse. Okay, that's the reason. And I think the same would be with the CBDC. Yes, central bank may have a monopoly on issuing the CBDC, but it depends on the public, yes, how much they will demand this CBDC. As far as the regulation of cryptocurrencies, stablecoins, and so on, of course, we understand that this should be addressed on the European level. As we are small countries, we cannot think that we can develop the regulation of our own. So therefore, we are participating in various committees, yes, which address this issue. And our position is a kind of technological neutrality. Yes, if some instruments provide the same, more or less the same services with the more or less the same degree of risk, they should enjoy the same regulation. Okay, they should not enjoy some comparative advantage from less deregulation.
Thank you for a clear answer. Clearly, you see that private initiatives and commercial banks are very well suited for this market, and as long as it's well regulated and controlled by the right authority, there is no reason for the central bank to intervene. Can I summarize it like that? Then I have one follow-up question here to Ľ.Ódor from Slovakia, Slovak Central Bank. Do you see stablecoin as a great alternative to costly cross-border transactions? Today, it's expensive to pay with cards and other means for cross-border transactions. Basically, consumer transactions with businesses abroad, or even business to business for that matter.
Question relates very much to the previous one. So, what can be a function of a central bank issued digital currency? Because even now we see there is a competition actually on markets. Still, the merchants pay a lot of money when we use cards. The same, there is competition in international payments, but still it takes ages, and it is extremely costly. So one potential way of thinking about CBDC is a kind of providing an alternative which can actually increase the competition. If the central banks provides maybe not as good service as the banking sector can, because we are not very good at creating user experiences and apps and whatever. But at least there is a robust infrastructure like a multi-country CBDC at a reasonable price. So basically that can drive the whole market, like the stablecoin market, in order to move in that direction and provide better services, cheaper services, and quicker services to the world. So from that point of view, it applies also to a domestic use of the digital euro. For example, if we provide a relatively cheap alternative, then probably also card companies and other payment providers will have to adjust. The question is, and this is a really big question, that it is not so easy to create a market. It is not so easy for players, because the central banks wants the banking system to distribute the digital currency or central bank digital currency. Then the banks are also providing card services to the merchant. What are the incentives? Who should do what? Who should pay what party how much money? So in that sense, and that is I think the real reason we are progressing cautiously towards digital euro or a central bank digital currency, that also it includes a huge huge or it means a huge change to the market of the payment infrastructure, and disrupting markets, it's not so good. If we are very successful, we can crowd out private solutions, and then that can be a problem. If we are not successful, in that case, nobody will use the digital euro. So, finding the middle ground is not so easy. But back to your question, actually, I think that also in this sense, the central bank, a multi-country central bank digital currency can actually also enhance the speed towards much better services at the international transactions level.
Is that the case for wholesale CBDC instead of retail CBDC? That's my follow-up question.
Yes, that is more tricky question because now we already have wholesale CBDC. Actually, the central bank is providing digital money to the banking sector in the form of reserves. So the question is that should we enlarge that possibility also to other players, for example, other service providers, or and on that sense, it is really something Marius started to talk about, that who should have access to the central bank balance sheet, and do we need to provide a liquidity of last resort to the whole system or through the banking sector? In that particular question, we are progressing even more slowly because there are more questions right now than answers. So the digital euro is also more about the retail aspect of it, and on a wholesale now we are sticking to the good old-fashioned financial players' access to the central bank balance sheet, but we are not in a rush to enlarge that universum of firms to access our balance sheet.
Aldrich.
I have one comment. How important is it to develop appropriate infrastructure and provide a wide range of services? I think there are even cases which can be termed as a failure of a CBDC. If I'm not mistaken, in Uruguay, there was a program called Dinero Electrónico, and the program was terminated because the public was not so interested. I wonder what is, for example, the development in the Bahamas. It was the first country which introduced this CBDC, and I think that the results so far are not so encouraging, yes, that the people are rushing, yes, for holding and using the CBDC. Therefore, it's really, yes, important to think it twice. And you said there are two choices, yes, to be too successful and too unsuccessful. So there are some cases, yes, which demonstrated that even the lack of success can happen.
I completely see your point there, because the Swedish central bank has been working with CBDC for a long time now, and they could launch it any day. The only reason they're not interested in launching it, they don't see a market. So they're waiting for the market, basically. And Martin, from Binance, do you see CBDC as a competitor or a complement, or is something that can help your business even?
I mean, just to follow up first on this, on what Mr. Dedek just raised. Why aren't they so wildly successful? I think it goes back. There's a couple of dimensions here. One is the element and dimension of trust. Goes back to what I was, saying at the beginning. I mean, in certain countries, if you don't trust the state, if you don't trust the central bank, if they're going to issue a currency, probably the trust will be very low. And I think, in a lot of Latin American countries, certainly in Argentina, I would be very wary about holding their issued CBDC as opposed to some other. But then if you actually look at other places in Europe, I mean, I think, Germany, but basically pretty much all of Europe, I'm actually quite optimistic, about CBDCs. I think there's a real role to be played. I think it could be a very interesting instrument. again, it's part of the essential infrastructure in a way, and it's just a question of sort of, essential at what level, and I think it's very fundamentally essential. So I actually look forward to the day when, the digital euro is in place, and I think it can be very, very helpful and useful. So again, I think it's about finding the right balance. I think the jury is still out whether the whether the stable coins as this infrastructure will eventually only be government provided, or whether there will be a real role for private sector ones. But I think in the meantime, going back, regulation is critical, and oversight is critical, because there are some stable coins about which there have been many questions and even serious investigations in the US. And I think because that's the real risk then to the financial stability that this can trigger, and not just financial stability of the crypto market, but the financial stability of the wider fiat market.
Thank you very much. We have a second question from the audience here. Isn't digital euro a necessity, considering the position of euro in the international trade, in case, in other words, the Yuan proves useful for global settlements? That is the question. Who would like to grab this one? The euro is a necessity, given that euros are used in international settlements.
I'm being very daring to say something in front of 3 central bankers here on this topic. But I think, I'm actually very bullish on the role of euro, as a reserve currency and as a, currency of international settlement. So I think it's important that Europe does have, and the euro does have that role, not just in the fiat world, but also in the crypto world. Actually, if you look at now, the kind of reserve currency status of the euro in the crypto world, it's tiny. It's almost non-existent. I think that's an issue, and I think that needs to be addressed. And again, the question is, what's the best way of addressing it? Is this something that needs to be pushed more by the European Central Bank, other central banks, or is this something that can be done by the private sector or in collaboration between private sector and the central banks?
Thank you. Marius?
I would like to link to our previous discussion that we had on the regulatory environment of a subject, and the concept of provision of service, and who is the provider of a service and how he or she is regulated. For example, Binance does not provide services in some of the member states where we are currently located, but still citizens have accounts at Binance, although Binance, as I said, does not provide services. And that relates to the issue that you just asked. Is the euro a necessity? If for some reason citizens in a particular country start using a currency or stable coin, be it privately or state issued, for their transactions, how can we prevent it if it's all done digitally? Do we have to introduce a new legal concept of what does this mean, provision of service? Because right now, if I'm not advertising, if I'm not, if you all of a sudden open a WeChat account, if it's all in Chinese, but you manage to go through with a translator, how can you prove to me that, WeChat is providing services in your particular country? And think through what could be done utilizing such a logic. So all these issues that we just discussed are linked together. How we prevent from a national perspective, how we prevent consumers from a consumer protection perspective, if a certain market participant is providing or not providing services, what the European Commission is proposing, and all of this is it's a very, I think it's unfinished business, and there's still a lot of to be debated.
Thank you, Marius. Who would like to follow up on this question? Maybe Martin? Or no? Here we go.
I just wanted to say one thing related to that actually when there was a report on a potential introduction of the digital euro, there were many scenarios. So these are the scenarios when we might consider introducing the digital euro, and the majority of those scenarios were defensive. So if something happens, therefore we should react to it, and better to be prepared than to be surprised by the market. But there were also 2-3 scenarios proactive. That if we would like to increase, for example, the international role of euro, we might be considering even introducing digital euro earlier in order to provide services, for example, in international trade and so on. But definitely my feeling is that right now in Europe, the defensive scenarios are prevailing. So we would like to be ready if something happens and not use digital euro as a tool or as a necessity to increase the role of this currency in international transactions.
Thank you. So we covered everything here, from digital currency in general, central banks' roles, CBDC, stablecoins. I have one more follow-up question on stablecoins. Argentina was mentioned a few times here. I was thinking with another country much closer to us right now, like Lebanon, that have a currency collapse basically, and people have no access to money. Could stablecoins in euros or dollars be the solution to monetize a country like Lebanon again? I don't know who this question fits for.
Actually, we have many dollarized countries or euroized countries. So my question is, what is, for example, for some collapsed economy like Venezuela and so on, what would be the advantage of some digital, let's say, Venezuelan currency? I think it was already mentioned that people would not trust as the central bank money if the country as such is not trusted. So I think that the dollarization is a standard way, okay, how to remove the national currency from the circulation if it is not trusted.
Of course, that's what I mean, that countries like Lebanon or Argentina, they could choose a digital dollar or a digital euro, not local currency. And given it's a digital currency, it's more difficult for local authorities and politicians to interfere in the currency issue and circulation than if the local banks are dispensing dollars or euros instead of local currency. That's why I might see it could be an advantage for a country that needs to dollarize and there's very little trust in authorities. Anyway, I think we are at 11 o'clock now, and it's time to wrap up this discussion. And I would like to thank first the State Secretary, Marcel Klimek, our keynote speaker, Marius Jurgilas, board member of the Bank of Lithuania. Thank you. It was very good to have you on board. Ľ.Ódor, Deputy Governor of National Bank of Slovakia. Marcel Klimek, sorry, I mentioned you already. I have you twice on my list here. Aldrich Jedek, Bank Board Member, Czech National Bank. Rok Schvelz, Legal Officer, FISMA, European Commission. Thank you for attending online. And Martin Brunko from Binance, who is really involved in this industry on a practical level. It's very nice to hear all your insights. Thank you all very much.